All right, so good morning, everybody. You're welcome to Market Structure Training. Okay, in this episode of Market Structure Training, we are going to be backtesting, the euro dollar, right? So we've done it for the institutional candle, we've done it for harmonic pattern. Okay, so we're just going to be backtesting. We're going to be like going back in time all the way to January 3rd. That was the beginning of trading this year, January 3rd. Trading started January 3rd this year. So we're going to be going, back in time to January 3rd and then try to, look, at the market with regards to what market structure, right? Was the structure of the market? What are the opportunities therein, in relation to what market structure, right? The last call we had was harmonic pattern training. And then we also did a back test on EU starting from January 3rd. And then we were looking at how many harmonic patterns actually formed starting from January 3rd till when, the time allowed us to like 11:30. And then we actually saw multiple harmonic patterns that formed that actually gave us buy opportunities. And because we had a daily directional bias, we know what price should do over a period of time. We were able to, catch some nice, we're able to see some nice buy opportunities, not catch rather, because I'm not sure we traded it. We might, but I can't remember. So, we saw it. So we're going to be doing the same thing from EU. Okay, we're going to go back in time, starting from January 3rd, looking at the structure of the market. We can go as low as 15 minutes. Okay, trading view allows us to go as low as 15 minutes. We can go to 5 minutes. We cannot access the 1 minute data, okay, because it is so far already. This is the 8th month of this year, right? So we've spent 8 months already. So we do not have access to those data. Okay, so we're going to stick with the basic time frame that everybody have access to, 15 minutes. Obviously, there is the 14 minutes, but in order to have access to the 14 minutes time frame, you need to have a paid trading view account. And I want to make this as simple as possible. So even though you don't have a paid account, you can always go back. You always have 15 minutes time frame on your chart. It is always there. So you can just check it. All right. So with that being said, let us proceed. Okay. All right. So January 3rd. Where is January 3rd? I can see it. Yeah, this is January 3rd. This was the candle that started the year. Yes. Exactly. So this was the last candle of the year, and then we had a new candle. Okay, this was January. Okay, Happy New Year, right? Price gave us a big bearish drop to start the year, and so we had price came down, and then we discussed why we were anticipating for price to go up and all of that. So now, in relation to what market structure, what is the structure of the market leading into the new year? EU has been going down. Okay, EU has been going down. So already the structure is what to the downside. The order flow is just what going to the downside, right? It's very, very obvious. Okay, I'm not just saying it's what you can see. So it's going up, come down, it goes up, come down, goes up, come down, goes up, come down. So the order flow is what to the downside, to the downside. If it goes up, comes down, like the drop is always much more bigger than the rally, right? It goes down, goes up, goes down, goes up, goes down, goes up, goes down, goes up. You understand? So the up moves are always lead to compared to what the down, downward moves, right? So already looking at this, the structure is going to the downside. Now you are only like looking at all of this, one, because you want to, position yourself with, like longer term trading, you should be looking for what? Sales. If you want to like swing trade, then you know you should be looking for sell opportunity because the market is going to the downside, right? But now, because you know you want to maybe day trade, you know, short-term trading and all of that, you don't want all this 10 days holding, 5 days holding and all of that, right? Yeah. So now if you're going to be considering that, then you have to, you know, go down into what lower time frames, and then now begin to look at the market, right? So now we're going to be looking at this. So we already know that the order flow is to the downside. The directional bias on the weekly, the daily is going to the downside. Okay, that's the daily on a larger scale now, because this is also the daily chart. And then if we monitor price action in this consolidation area, it is actually going to the upside. But taking, you know, it like on a larger scale, you know, zooming in now. Should we say zoom in or zoom out? I don't know. Zoom in. If you zoom in, zoom out. Okay, so if we zoom out, yes, if we zoom out, you're actually going to be looking, you see the structure well, and then you see that it's actually going to the downside, right? But because, you know, we want to just, you know, get into all of these small peeps and all of that, you know, day trade, intra, all of that. So we will be looking at the structure in this area. First, we know it is going to the downside. So any buy we are catching here in relation to structure, we know we're not expecting it to go that far. It can go that far, but we are not expecting it to go that far. That is why at times when you trade, you're surprised because what you're expecting is not what, you know, the market can do more than what you're expecting. You guys remember the VIX 10 trade, right? Who knew that daily lower low was going to lead to a weekly and monthly break of structure to the upside? Nobody. I mean, some people might know. I don't know if, but who knows? Based on the structure, from the lower low, it should give us a lower high. But then that actually went above, my imagination and all of that. Like, wow, it actually did, close above that daily lower high, and then it broke structure to the upside and it gave us a new higher high. You understand? That was a very, very, long-term trading, right? Who would have known that there was going to be a structure shift immediately, like after that price got to the lower high and then it broke structure and then created a new higher high, right? There's no way we would have known that, right? But now looking at this, we can see structure. Okay, remember, overall is bearish. So the buy you want to catch is, now you need to ask yourself some certain questions, right? Why are you buying, right? Why are you buying? Is there any liquidity or imbalances that you feel price might get to, so that way, you can take a buy because you have a target? You don't want to buy first and then start looking for targets. No, that is not how it should be. You don't want to be buying, then just click buy, and then I'll be like, okay, now where should be my target? Where should I be looking to take profit? That is part, it is all part of what, how to qualities of a good trade setup, right? You must have your target, you must have the reasons why you want to take profit at this place. Understand? And all of that has to do with understanding the market, understanding areas of liquidity and imbalances. It does not only have to do with market structure. Okay, that is why everything is interrelated, everything is intertwined. You understand? You need to have the knowledge of this with this with this. You bring it all together. Because if it is just structure of the market, if you're just buying higher lows, taking to higher high, you're just buying lower lows, taking to lower high, you don't know where to take profit. All you just know is if you buy at higher low, you want to take profit at the previous higher high, all of that. You want to have reasons, and most of these reasons really might have nothing to do with what structure. This equal highs that is here, this liquidity that is here, is on its own. It has nothing to do with what structure. Imbalances also is on its own, has nothing to do with what structure. But now you're looking at the structure. Okay, higher high, higher low. Okay, I should be looking to buy because market is bullish. Now, when it comes to taking, profits, target areas, these concepts are on their own. Imbalances is a concept on its own. Liquidity is a concept on its own. We have equal highs up here. Right? Okay, price should buy. But now let us look at the structure in this area. Okay, let us look at the structure in this area. All right, so now price has given us this, big swing, lower low, lower high, and then we had this big push to the downside. All right, so we had a big push to the downside. If only we can get price to 50%. Now, I don't know if price got to 50%. Let's confirm it today. Okay, let's confirm it today. Yeah, 50% is what? 50% and above is what? Premium. Right, it does not have to, the price does not have to get to what, 71, 78, 86 before you consider it what, premium. Equilibrium and above, that is 50% and above, is premium. 50% and below is what? Discount, right? So they, the price moved from up here to this. We had this big push to the downside. Smart money were just looking to take price all the way to 50%. So 50%, they were giving sellers opportunity to get in at 50%. If you were waiting for the 618, the 71, the 78, 886, some people can even go as far as waiting for 94%. Boom, you missed out on this trade. Doesn't happen every time. There's some retracement. We see that price go all the way to 886. Some retracement price go all the way to 94%. Some even go 100% retracement and then drop. Equal lows, right? Equal highs, stuff, all of that. Right? But then this is what a premium entry. The only reason why we can't take this as, smart money traders, because if you're just buying at 50%, this is going to be too much. All right, the stop loss has to be way up, and then your target has to be way down. You understand, right? Okay, has to be way down, right? So yes, this got to 50%. Let's cancel this again. Yeah. That was January 3rd, right? So now we're going to be looking at the structure. First, we've gone to the daily time frame. We've already seen what this equal high is up here. So now we know we have liquidity here. We have imbalances here. So now you're beginning to build, reasons. You're beginning to give yourself extra confirmations as to why you feel this should buy. Because aside from understanding the structure, aside from seeing the structure being bullish, you also want to have reasons as to why you feel this might go up, right? Because smart money will not just be respecting higher highs, higher lows, higher highs, higher lows. What is actually pushing price to go higher? Is there anything that price is attracted to up? You understand? And then we have this, equal highs, and then we have liquidity. We have liquidity above, and then we have this imbalance. We also have this imbalance, this bigger one here, right? Okay. We even have one also in this area. Okay, from here, we also have this imbalance, right? All the way to here. So now we have three imbalances up that smart money, we're anticipating smart money to get to. I think they got to the second one. I don't know if they actually got to this one. We're going to see now. All right, so now we have targets. We have reasons as to why we want to see price buy to the upside now. And now we come to the structure of the market. Okay, it was giving us some kind of, higher high, yeah, give us this higher low, give us this higher high, broke the structure, give us this lower low, lower high, lower low. Guys, I'm concerned. And then gave us this what am I again? Okay, this I, this low, this I, and then let me just put my phone on flight mode. Sorry, I don't want to get distracted. All right, so we're on this higher high, higher low, higher high, close below this low, lower high, lower low, and then we have this, higher high. So now this, we have liquidity, we have liquidity, we have liquidity. So there's money sitting above this area. And then I explained, why we're looking to buy, and why, like I said, I explained why we're looking to buy because of the liquidity structures. Also, just looking at this. Now we're picking this. We're not looking at the main structure. The main structure is bearish. Okay, so you should be looking for sales. But now looking for sales means you have to wait. Okay, because when price has given us this, swing, like price has given us this low, the swing low, right? If you were looking to sell, you would have waited for, how many days? You wait and wait and wait and wait until it gets to 50%. Then you're going to start looking for sell opportunities down. But imagine, how many days you would have waited. This days or weeks. Okay, it created this low November 24, came all the way here, January 5th. That is 1 month and a few weeks. I think 1 month, 1 week, and a few days or so. Right. So you'd have waited just a whole month without trading. Can you do that? No. All right. So I've been, at the understanding, you don't have to wait that long. Okay. You don't have to wait that long. Even look at our price, came into this imbalance here and then rejected. You would have, caught a very nice buy opportunity in this area. Just that you cannot determine the extent to which a new lower low has been set. But let's assume, like peradventure, you got to know that this would have been the low, and then you see this big bullish move. You understand? And then we had this. You could anticipate what this internal liquidity to be swept. So you can be looking for buy opportunities. And you might have seen a very good buy opportunity here to take it all the way up. Even before it gets here, you'd have made your 1 to 3. Price came back down. You would have caught multiple buy opportunities here because you know how to, go into lower time frames to look for those opportunities. But if you don't know how to, you're just going to be waiting for 50% sell here, and then you have, waited a long time before you can now trade. Frustration would have just made you get. So price, came, down here, and I like I explained during the institutional kind of training that we're looking at what price to buy, rejection from this institutional big, institutional candle. We also had some kind of liquidity in this area. So we're not surprised seeing our price, tapped it, swept it. Okay, it did not really sweep the last one, but it swept this last two liquidity here. Let me show you. Okay. Yeah, right. You can see this one and this one. We had this candle swept it, and then price now begin to reject. Again, we are not going to be taking this trade on the daily time frame. We're going to be going into lower time frames to look for what evidence that price wants to buy. Okay, that evidence that price wants to buy, just like we did for the institutional candle, smart money candle training, right? We know that, okay, now, since this is the candle, if price can get, yes, it tapped it once. You can see it tapped it once, because if we like do 50% now, we want price to reject from 50% of this institutional candle, right? 50% will be, yeah, right? So this candle came into the 50%, but went up, did not sweep the equal highs. We had the next day was a bearish day, and then the next day after the bearish day was a bullish day. Stopped at what? Equal highs. They're just building liquidity. This is already giving you a telltale sign that this will buy. Okay, that this will buy. All right, so we have, this, area as to where you are anticipating what now. Price should come into that area and accumulate. Okay, so potential area for accumulation, and then we just go what to the lower time frame, right? And then the lowest we have is 15 minutes. All right, so this is the 15 minutes time frame. Now you're going to be what considering what structure again. You're going to be considering the structure again. I believe this was when price came into the 50% for the first time, right? You can see how it gave us what, looking at the structure, we had what, this high, We had this lower low, we had this lower high, and then boom, we had this big push to the downside, and then we had big bullish move. Look at the response. Look at how price moved away from that, candle, and then just went up, broke the structure, right? And then price dropped, right? Now, you could, if you had looked to play this, you'd have missed out on this. If you were looking to play this imbalance, you'd have also missed out. But if you were looking to play this imbalance, that would have been a very good entry for you there. But now, if you don't want to play the imbalance now, like let's just say, okay, so now you have, because all of these areas are what discount now. So if we take the fib from the low here to this high, okay, we are looking to buy anywhere below 50%. Is this imbalance at below 50%? Yes. Is this imbalance below 50%? Yes. And then we have all of this, right? Yeah, and then we have this liquidity here, this liquidity here, this liquidity here, and this liquidity here, right? And then this candle was the sell. Okay, the sell started from this candle, big consecutive down candle. So if we're looking for that mitigation candle, it is this one starting from here down. And we are not surprised seeing our price came to that area, and that was where what mitigation happened, and then boom, all the way to the upside. But if you were going to take this trade, from there, let me see the stop loss. If you put your stop loss down here, that is 27. Cool. It's below 30 pips. That is okay. For me, my entry is going to be at 00 figure. This is 26.3. So I'm going to put it at 26 pip. And then 26 pip, I want to make 3 times what I am risking. So 26 to make 78. Even the first touch of it, price, you would have actually had your 1 to 3. Although it's going to take you how many days? This is December, on the 30th of December, 9:30 price and time. 9:30, you go activated. That is 1 hour, 30 minutes into London Open. You go activated 30th of December. You held the trade. 31st, the next day at 5 p.m., you were out a 1 to 3. You made your 1 to 3. Structure shifted to being bullish, and then boom, you took the buy from there. So if you were playing this institutional mitigation candle, stop below the low. Remember, if you are playing a mitigation candle, the stop should always be at the low. It is maybe when you're playing imbalances that you can just put the stop loss below the other candle that created the imbalance at the wick to the left in a bullish mark, in a bullish, like if you're looking to play a bullish imbalance, 3 candles create an imbalance. The first candle to the left, then the candle itself that has the imbalance, and then the third candle to the right, right? And then the first candle to the left can have a wick or might not. And then let's just say it has a wick. And then the third candle also had a wick. So one wick is going to be up, the other wick is going to be down like this, right? And then you have that imbalance, right? So the first candle that actually created that wick, stop loss can go below that if you're looking to play the imbalance, because the idea is price should not go below the imbalance. You should just feel the imbalance, accumulate what it wants to do there, and then go. You understand? Yeah. And all of that is still what below 50%. So if you took the buy from the mitigation candle, stop below the low, boom, you had your 1 to 3. If you were looking to play this imbalance, now look at what I was saying. If you're looking to play this imbalance, this is the imbalance. It is still below 50%. Now, entry can either be at the open 50% or few of the imbalance. Anywhere is okay. But to just be in the game early, right? You want to be in early, you can play the open or maybe 50%. For me, I would just look for the one that has my, numbers, 50 levels and all of that. So I'm just going to play 130, 50. Stop can now. This is the 3 candle I was telling you about, right? We have this first candle here. We have the second candle, and then we have this third candle. So this first candle, stop loss can just go below that. Okay, that is this one, that should be, yeah, this area has about 8.6. So I like to make it rounded. If you know me, it's always rounded, right? So I just make it 9 pip, right? So 9 pip, and then I want to have like 27. So I'm going for 27, right? That's my 1 to 3, right? So if you were playing the imbalance, you also had your entry, right? You got in here, what time? This is 9 o'clock, an hour into, beside, you even got activated, the first candle that activated at 8:15. That is 15 minutes into London Open. So you were actually trading in the Q zone, right? You were trading actively in, London session. So you got activated, sniper entry, you had a little bit of drawdown, price consolidated for 1 to 1 to, and it's 1 hour, 30 minutes, and then price now began to, give you bullish price action. And then as long as it didn't hit stop loss, you're good. Price went all the way to 1 to 3. It took, if you took partials, right, you took partials, stop loss to break even, this push down would have stopped you out. But then all the move to this high, this would have been a 1 to 9 for you. Okay, if you play the imbalance. Why? Those that play the institutional mitigation candle would have been a 1 to 3. But if you play the imbalance, it would have been a 1 to 9. And then whoever played the lower imbalance missed the trade. That's how it is. It cannot be 100% for everybody. Some are going to take losses. Some are going to take winning trade. The same trade. Everybody's looking at the same thing, but different things happen. Some miss the trade. Some get in, make profit. Some make loss. Understand? Example of people that make losses, that they want to play the imbalance and then they just put the stop loss at the feel of the imbalance. Okay, and then they try to play open and then they take loss. So different things happen at this area to different traders. So a lot of stuff is going on here. You understand? So just be grateful it goes your own way. Okay, it's not because you're better than the other person, right? I mean, it could be because you have more knowledge and all of that. So could be. Yeah. So this played out structure wise, right? Bullish. We had, this break in market structure, right? Okay, we had, so, higher high, even it was here. Okay, and then that higher high, we're looking to buy at higher low and then to take price all the way to a new high. So you took, another kind of trader. Thank you. Those waiting for accumulation because they feel when something pip is too much. Yes. So different things can happen to them also. They can be in the trade and then like, yeah, let's look at it critically now. If you were waiting for accumulation inside this imbalance, I do not have access to the 1 minute, but from what I'm seeing, this would have broken structure on the 1 minute. And then you'd have tried to play the retest, boom, you would have taken a loss on this. And then all of this push up again would have maybe broken structure, boom, took second loss again. Let's not lie about it. So it could be dangerous. Lower time frames can be, but I mean, they work well, okay? If you take one that goes your way, you can recover all the losses back. Yeah, so now that was the first time price got there. If you played, no, I would have given us a nice buy opportunity. But now, let's say you did not see that one, and the second opportunity was this one when price came down here. Okay. Okay. Now, this was the second time price came here. Now, the reason why this would still be a little bit of high probability was because they did not capture the daily highs. They were just creating liquidity. So that's giving you telltale sign. Okay. Yes, might be looking to go up. Okay, and now we have this on the 15 minutes time frame. I can't go lower because we do not have the data for that. So on the 15 minutes time frame, we're going to be looking at structure again. So accumulation distribution is just looking for the same thing you would look for an higher time frame on a lower time frame. Right. So now we're expecting what? Structure break. Right. Lower low, lower high, lower low. We had a shift in structure. Big bullish candle. Boom, boom, boom. Broke the structure. So higher high, anticipating a higher low, and then maximum stop loss area should be this low where price should not get to, and then You want to take the buy and then all the way to what? A new higher high. And if you have the highs to see it, you can hold all the way to daily highs up here. Okay. And then that was exactly what happened. Yeah. So now price came into this line. You see this line here? This is the what potential area for accumulation, that daily 50%. This is it. So price has gotten there now. And then we have what? Lower low, lower high, lower low. When we were talking about the harmonic pattern training, I showed you guys something that happened here, right? This liquidity that was here, all of this liquidity here got what? Captured. So smart money captured this liquidity in this area. And now, if you were anticipating accumulation below lows, if you see it, you will know there is an opportunity here already, right? On lower time frame, this would have been a what? Lower low, lower high, lower low, lower high, lower low. This would have been a breaker structure in lower time. If this was the 5 minutes, this would have been a breaker structure. To the upside, I'm sure there would have been an imbalance somewhere here, or you would have actually had an entry here that you would have taken to capture what this liquidity resting up here, and that was what happened. But let's say you missed that, you missed that higher high, higher low, higher high, and how would you have joined it again? I mean, there is still an opportunity, right? Just that you have to wait a little bit more, right? Because all of this, it took this setup from here. This was January 3rd, and then to here, January 4th, a whole day, like a day for this to, so you just have to be patient, right? And then we had the breaker structure in this area. Okay, we have our breaker structure, and then we have this is the higher high, the higher low. Right now, going into the 30 minutes, okay, going into the 30 minutes, we have this liquidity sweep, and then we have what? You can see this candle, you see this institutional candle, right? This is an institutional candle that is in the form of a what? A smart money cube, right? Or you guys call it maybe other block also, right? So this would have been the entry. All of this is happening what? At 50% or below. So you don't even need to draw your FIB. You already know it is below 50%, right? All of this, because all of this area is where you want to be looking for what? Buy opportunities, all of this area here. Okay, see, all of this area below is 50%. So we have this candle that is there. If you were looking to play the open of the candle, still cool. We're looking to play open of this candle. I'll be at open will be at this is 128.92. I would just play the 80. Yes, that's what I would have played. Yeah. And then with my stop here, that is 16 pip. I can just take 16, and then I'm aiming for what? 1, 2, 3. You understand? So 16 to make 48 pips, something like that. And as you can see, we had it, right? So price gave us that. Okay, so you took it from what? The next ILO into a new what? Into a new higher high. Price and time is activated what? 18:30. That's a little bit late, but then it got activated then, right? But let's say you missed out on this, or it was outside your trading time. How would you have gotten in on this trade again? We can monitor. Let's see what happened in this area on the 15 minutes. So on the 15 minutes, we can see what happened in this area. So price was coming in the bearish form, lower low, lower high, lower low. What happened again? Remember, the topic for today is market structure. So we're looking at market structure, how would us, in relation to how you now catch, as I'm teaching you now, I'm, combining, the institutional candle, the mitigation candle, everything with the market structure and all, right? Because like I said, you are not just going to be just trading the market structure, higher highs, higher lows, higher lows, right? Even at the higher low, there's some certain things you want to look out for before you buy, right? Is there imbalances? Is there, imbalances, liquidity that you want some money to capture, all of that stuff, right? A lot of things, a lot of stuff goes on at that higher low, right? So now looking at this, this is that area where, you're looking to buy if you do not want to have a limit order. Maybe you're waiting for accumulation to take place, right? And then we had what, a 15-minute accumulation, lower low, lower high, lower low, and then we had a break, right? We had a break, and then price gave us a new higher high. So now that we have a new higher high, this is where we have our what? Now we have our break of structure in this area, right? We have a break of structure in this area. Now, this can be okay, now look at this. We had what? This liquidity, all of this liquidity from here all the way to here got swept, right, by this candle. So this is where, the mitigation candle started from, right? This is where the candle started from, and then we're expecting price to come and mitigate. So if, we had the accumulation here, and then you have your entry here now waiting, because this happened on the 5th of January, 12:45 a.m. So let's say you want to wait for London session. London session on the 5th is going to start by 8 o'clock. Yes, so 8 o'clock, this is London session. Let's say you want to trade, you want to trade in the session. So you want this to activate in the session, okay? Oh, is it New York? No, this is 5th. We have London first, 8, and then New York by 1. All right, so 8 o'clock, that's when London session started. But as you can see, it didn't come back down. Okay, it didn't come back down, but instead, look at what happened. They didn't come back to mitigate this, but what happened? They rebalanced price in this area. Remember, there are 3 words, different entry techniques we have. Either you use the smart money cube, you use the mitigation candle, or you use the word imbalances. In this case, smart money went for what? The imbalance, right? So you can see they came to feel the imbalance and then rejected. If you wanted to play this imbalance, okay, let's see first if so we have this low, and then we have this high. So yes, this imbalance is actually above 50%. It would have been too risky. Okay, we want to take price at discount areas. Okay, so they didn't give us a discount entry here. Okay, they don't have to, it's not compulsory, but that's what we want. So they didn't give us a discount entry. They just filled the imbalance and then ran off. Okay, and then you missed that. So if you're not in already with the limit order from this 30 minutes institutional candle, you would have just been waiting, right? Just been waiting to see how can you catch this. The market is bullish, right? The market is bullish. The order flow is beginning to go to the upside, right? And then we have this higher high, this higher high, this higher low, this high, this low, and then this high, and then into what a London Open on the 5th of January, London Open, right? I really wish we can check smaller time frame here, but no, there's no way. If I go to the 5 minutes, we do not have the information. Yeah. So let me check 10 minutes. Do we have 10 minutes? Do we have 9 minutes? Do we have 8? Do we have 7? We have 6. I'm not sure we have 6, but let's see. Oh, we have 6 minutes. Yeah, I think 6 is the lowest. I'm not sure we have 5 minutes. Yeah. Okay, but we're just trying to see. All right, so this is London session. Market is bullish, right? We have higher highs, higher lows, higher highs, higher lows, and then we have this higher high. So leading into the session, you could have taken a buy opportunity because the market is bullish, right? And then I think on the 7 minutes or 8 minutes, we had this, institutional candle here. Okay, down candle, big bullish move, and then just play the retest, and then maybe 50% or something, right? And then to just continue taking price all the way to the upside. But some of you may not have access to that time frame, so we're not going to use that. Okay, let's just stick with the one, the 15 minutes. Okay, Yes, so yeah. Okay. All right. And remember, we are anticipating for this eye to get captured. Okay, we want to sweep this external liquidity that is resting here. Okay, that is why you are looking to buy, because you can see already the order flow from down here is going to the upside. So you just want to take price to capture what the external liquidity resting up there. That is where the higher high is. Right. And then you'd have actually on a lower time frame, I'm sure there would have probably been an imbalance or something. That price is just coming to and then rejects. That would have been your entry for London Open to take price all the way to the upside. Okay, so now price swept the liquidity at 11:30. Price rallied all the way down, and then going into 1 o'clock, that was New York Open, right? And then just traded all the way up. I think price still came back down. Right, price still came back down. Okay, so price still came back down. So now let's look at the structure. So now they've captured this liquidity. Okay, now we have our new range, right? We have this higher high, now this higher low, and then we have, let me see this quickly. All right, so we had this, little, break here. Market gave us this higher high, higher low, higher high by about maybe 1 pip or 2 pip, and then came down, broke the structure, okay, gave us this big imbalance, right? And then we had this lower low. This would have been, really cool. Like this trade would have been really cool, maybe short term, just sell if if they had like come into this imbalance, you know, and then just reject, right? Maybe just come into the imbalance 50% and then just drop to the downside, right? But we didn't have that. They just captured the liquidity straight up. Like now we just captured the liquidity, and then we had this low, lower high, lower low, and then let's see. Remember, we are still looking for buy opportunities because you have a what? Daily directional buyers. You have this liquidity that is still resting up. So you're looking for buy opportunities to go up, right? And let's see what happened in this area. Okay, okay. Do we have one more push down? Oh, no, 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 he didn't. So now it broke the structure, right? We had this lower low, lower high, lower low, right? And now price did what again? Price now broke structure back to the upside again in this area, right? So we had this, okay, and then we have our breaker structure. Yeah, just like what happened in this area, right? Big push up and then retest. Big push up and then what? Retest to the downside, right? But then look at this. If you were to go by structure, we had this higher high, right? And then this higher low. Okay, no, this is the higher low, yeah. And then it gave us a new higher high actually. Yeah. So now price broke this structure to the downside, gave us this lower low, this lower high, this lower low. So now price is now bearish. So if you want to wait for confirmation that this should go, to the upside, we had it here, right? Lower low, lower high, lower low, boom. And then we had a breaker structure again. Then you would have actually gotten in again to the, yeah, in this area, still at that 50% again, we had what? Lower low, lower high, lower low. Price broke the structure to the upside. So now the 15 minutes is back to being bullish again. All right, so we have this. Okay, you guys can see it, right? Broke the structure to the upside. We have our breaker structure to the right. Now you can play the retest, right? What do you see at discount? Now at discount, what are the things you see? For me, I can see an imbalance, yeah, from this week to this week. I can see an imbalance, yeah. Okay, I can see that. I can see maybe I can decide to play 50% of this institutional candle, 50% of this institutional candle, yeah. Even if I decide to play 50%, all of this is going on at what discount? 50% of this candle is somehow lining up with this imbalance. So it is the same thing, just confluence. And then if you want to play imbalance, maybe the open, that is 129.23 will be 129.20 for me. And then stop loss, remember, 3 candle for the imbalance. This, the stop loss can just go here, right? That's about 5 pip stop loss, or just to be safe, 5, 6, 7, all the same, no difference. You can put it low here, it's the same thing, 6 pip. Anyone is okay. You understand? Anyone at all. It's okay. Or even the opening of the cube, exactly. You can choose anyone you want, and then you're risking 5 pip to make. Now let's see price and time. Let's see if price and time played out here also. Okay, we had this, so we're looking, this was the entry. This happened 45 minutes into a new day, right? On my broker, the new candle starts by 10 p.m. So 10 p.m., which is this candle. So this is my daily opening price from my broker. So this is the opening price by broker. And then remember, if we are anticipating a bullish day, buying below what opening price in bullish conditions, that is what happening. That was what happened here. Boom, this got in here. Although this is, very late, some people might have slept. You're not in line with any of the London or New York session. None of them is open. Okay, that doesn't mean the trade will not play out. You understand? But then it's just going to be slow and all of that. Then remember, we want to take it all the way to this eye or this eye. And then we have what? Daily imbalance. Okay, daily liquidity up there that you can be anticipating. So higher high, higher low, and then you've made your 1 to 3 already on this trade. So let's say you now waited for maybe London session. London session is going to be by 8 o'clock. 8 o'clock, yes. So we have London session, right? So this is London session also. Okay, so we have, this is our London session starts at this candle. Okay, and then let's see, so price rallied up and then came back down. Now, where did price come back to? From what I can see here, price came back to this imbalance here. This opening, this candle that gave us the entry below the open created what? An imbalance. And then that was where price came back to then take price up. So if we are buying below the opening price in bullish conditions with regards to the daily time frame, we are also buying below opening price in London Open, which is still the same concept. You understand? And then we had this entry down here, and then take price all the way to the upside. So something like this. Yeah, entry there. This is the candle. Now this candle is a little bit see this, let me remove this. Okay, this candle here was the first candle that created the imbalance, and then the second one was this big candle, and then the third one. So if you had put a stop loss at this candle here, this low, you'd have actually hit a stop loss. So I would have gone for this, big one. This one, yes, stop at this low here. That's about 5 pip. Okay, you don't have to be too stingy with your stop loss. Okay, this is 5 pip. As a matter of fact, this 5 is even a little bit above this week. So I would just go for 6. Just save more space down. Yeah, so 6 pip. This is 52. Just gonna put it 50. Let me check 5. Now that should be 5 should be at the week. Yes, 5 pip. Yeah. So 50 level, 5 pip that have been the entry, and then boom. So yes, you did not partake in this entry down here. Besides, whoever got in here still has not been stopped out, right? It's not been stopped out on this trade. You're still in. Oh, I think you stopped out Oh no, 20, because you play 20, you're still in. Stop load is about 5 peep also. So 5 peep, 5 peep, you know, first entry, I was below the daily opening. And then this is London open, also below opening price. And then boom, you just take price all the way to the upside, right? And then for New York session, also New York session is by 1 o'clock. 1 o'clock, that is 1 o'clock. This is 1. Oh. You didn't even get the entry. You got the entry at New York. That was it. London, you were just looking to buy below opening price. And then actually buying below that opening price in London was actually the New York entry for you. Are you guys seeing that? That was actually the New York entry for you. That was where price got to boom and then rejected and then went up a bit, came back down, and then we had this big candle to the upside and then came back down and then started going all the way to the upside. So London, New York, yeah, and then New York is where? New York open is this candle. Yeah, so we are also buying below New York open. Yes, so cool. And then you can take price all the way to the upside. So did he capture the liquidity above? Finally. Oh, it didn't. Okay, he started coming back down again. Whoop! So we must have been stopped out already. Looking at this, can see came up. Now they're just playing with your emotions. They're just playing with your emotions. Like, when will they come for this liquidity? Now they've created what? Liquidity here again. Okay. All of this is because you are anticipating what? The daily liquidity to get captured. And they've not captured the liquidity yet. This is still it here. All right. So now a new day to look for buy opportunities again. It took this fine. They've stopped you out down here. Coach, what setting did you use that makes you mark the exact spot for London and New York session? I'm using London time because London time is the same as Lagos time. Okay, London is UTC +1, Lagos is UTC +1. So it's the same time for London and Lagos, right? So, and then I go to Forex time zone converter.com, and then I change this to London. Once I click London here, it's going to give me London open is by 8 p.m. New York open is by 1 p.m. So 1 p.m. London is 8 a.m. So I just go to my chart. 8 a.m. on that chart is my London open, and then 1 p.m. 13, which is 1, is my New York open. Very simple. Okay. What assets am I analyzing? Oh, sorry, this thing is hiding it. Sorry. EURUSD, 15 minutes. All right. So that is how you can check the just come here. Okay, if you change this to New York, okay, like whatever time zone you want to use, if you want to use New York is -4. Once you click on -4, and it's going to change everything. Now, London open for New York is going to be 3 a.m. You come here and then you just choose America, New York. Okay, boom. And then you have it here, London, 3 a.m. But then I just like to use the one with my time. So my high mark is showing 11:22. Let it just be doing the same thing with me. I don't want to get confused. So London, yeah, same thing. So I know as I'm waking up in the morning, 8 o'clock, London up. So yeah, very simple. Okay. So now this trade, if you took partials and all, and then you were open is going to get up, boom, took you out here. Okay. Yes. So now a new day to analyze again. Let's see. What was the structure of the market? Yes, sir. Okay, so let's see what happened here. All right, let's stop. Let's analyze what happened here. So they've captured that 1 hour, this 15 minutes equal highs. We had this liquidity here. Okay, you guys can see this before this daily liquidity. This is that daily liquidity. You know what? Let me do this. Text. So we just put it as that daily liquidity. Okay, and then I'm going to put it to the right. So you guys can see it. Yes, that is that daily liquidity up there. They've not come for it yet, but today is looking like a good day. It means it seems they're going to come for this liquidity since they're closer to it now. But let's see what would have happened in this area. Okay, structure wise, market was just going down, and the market was going down, and then the structure was what? We had this low, we had this high, and then we had this big drop to the downside, and then we had this lower low. Right, so we're waiting for a structure shift in the market, and that happened in this area. Right, boom. Okay, we had this. And you see it broke the structure. Right, so we have this this low all the way to this high. So now we want to be buying at what? Take up the fib again from the low all the way to the high. We want to be buying at 50% or below. That is discount, 50% or below. What can you see below 50%? Number one, I can see an imbalance here. I can also see an imbalance here. Yeah, that is the two imbalance I can see in this area. Right, so now two imbalances. Okay, and I remember there was an harmonic pattern that formed here, right? We discussed it during the harmonic pattern call, right? And then this entry was 14:45. That is 2 hours 45 minutes into the New York Open. Still making sense. It's just 2 hours into the session, so you are still trading inside the Q zone, right? Cool. So now this was below 50%. I would have played this also if you were trying to play the open or 50%, anyone. For me, it's just going to be a rounded number. This is 36. I would have tried playing 20. Yeah, if it was me, I would have tried playing 20 and then I would have missed it. But then I could have also have played 50%, 50 rather. So I don't know, but I know my entry would have either been at 50 or 20. Stop loss would just be at this, this is the 3 candle. The first candle, the second candle that creates the imbalance, the third candle. Now, this is lower than this, including the wick. That's why I'm going to put it down here. That is 13 pip stop loss, which I will just round up to 14 pip for me. And then this. So we had this trade happened. This is New York Open. Okay. So that is just 2 hours 45 minutes into New York Open. Boom. And then even looking at how all of this liquidity is just building and building and building, you already know what's up. Look at, they just kept building this liquidity here, this liquidity here, this liquidity here. So you can just, yeah. And then look at this. This is 11. On the 11th of January, if you bring it all the way back down here, this is 10 of January. 10th January, this is my opening price for my broker. Okay, so this is the opening price. Remember, in a bullish market, you want to be buying below the opening price in bullish conditions. Where is the entry? Below what? The opening price. Boom. And then what? It took entry. This is the low of the day. Yeah, this is the low of the day. Coach, you would have considered the imbalance below where your stop is, would have been above. Coach, you would add, consider the imbalance where your stop is. I'm not getting the question. Yes, we have 2 imbalances here. You understand? The price could come down here. I'm not saying it might not. You understand? And then this would have actually probably been a loss. Or maybe the best way to do it is, let me see, if the stop loss is way down here, that's about 31. Nah, that's too much. You understand? No, I would have taken this. You understand? And then looking at, I would have actually added this first entry up here. Yeah. And then maybe this should have its stop loss, but it didn't. So it could come into this imbalance, price could come here, wick down here and reject. Okay, it is possible for that to happen. It is still, even if it comes down here, you are still buying what's below the opening price. So it could happen. You understand? But then we have 2 imbalances, it could reject from here, it could reject from here, and then the price just chose to reject from this one. Whoever had played this one here with a limit order missed out on the trade. I mean, it's not bad to miss out on it. You just missed out on it, right? And then I took this one, price gave you a very nice entry. You caught the low of that day. And then, because this is the opening price, so this is the daily candle. So the daily candle started bullish. It did not give us any wick to the low. This would have been the wick that's going to create that daily low. And then anywhere it ends would have been, this is January 11. Oh, no. I think I'm making a mistake now. This is January 10. This is the beginning of the candle. Yes, this is the low. And then this would have been the high. Yeah, so you caught the low and then you exited near the high of the day. Makes sense. Cool. Can I explain more? It's a very simple concept, right? It's just you trying to catch the maximum peep you can on that candle. Like if the daily is going to be bullish, you want to be looking to buy what? Below the opening price. How do you get that? First, you need to understand and be able to identify your daily candle open. Okay, your daily candle open. Now, how do you identify your daily candle open? Very, very simple. Let me help you guys quickly. Okay, all 30 of you on the call, this is how to identify it. Okay, I'm just going to go to a new chart. Okay, I'm going to go to EURUSD. Just follow me as I'm doing it. You guys follow me as I'm doing it. Okay, this is EURUSD. I'm going to go to the daily time frame quickly. Okay, and then we go to today's price action. Okay, today's price action. Looking at this big drop, I think EU is going for, DXY is actually going for that liquidity above now. All right, so we go to the 1 hour. Okay, and then I'll go to the 15 minutes. So now everybody on the call, if you cannot identify opening price on the daily, just follow me as I'm doing it now. Go to your EURUSD chart. Go to your EURUSD chart. Go to the 15 minutes time frame. Okay, go to the 15 minutes time frame. And now, depending on whatever your time zone is, any candle I highlight as the opening price, that is going to be your own opening price also. It's not going to be different. Okay, so this is on the 24th. So my opening price for today's candle is going to be yesterday, 10 p.m. I'm just going to look for 23, 23, 23, 23, 23, 10. Yeah, this is my opening price. Yeah, so everybody, this is the opening price, 23, 10 o'clock. This candle, yeah. Okay, I'm just going to light this candle here. Okay, you see this candle? Look for it on your chart. Look for it on your chart. Okay, let me know if you've actually searched it. You've seen it already. Just type seen. Okay, 15 minutes chart, we should all have the candle there. It's going to be the same. I mean, it might be different a little bit, but you should have this candle here. So if you've seen it, just type seen in the chat box so I can know I can proceed from there. Okay. All right, seen. All right, good. That's good. All right, you see this candle? This one candle here, that is your opening price. Okay, so I want you to click on the open, because this is a bullish candle for me. So the open is going to be this down here and then drag all the way to the front. When you drag it all the way to the front, now go back to the daily time frame again. Go back to the daily time frame, you should see the candle here. You can see if you extend it to the front, this is the daily open. Okay, this is the daily open. Can you guys see it? Again, I'm going to repeat myself. Okay, go back to 15 minutes chart. Okay, this candle here on my time. Now, if you are using the London, time zone, it should be 10 p.m. 10 p.m. every day. That is when the daily candle is opening. So we in Nigeria, a new day is starting, 2 hours after. But on TradingView, the candle is starting 2 hours before the day. So it is starting by 10 p.m. So every 10 p.m., that is the daily open. Okay, that is when a new candle is forming. All right, so anything above that is what the high, and then all the way to the downside. So now remember, if, like, for example, now EU today is, if potentially EU is going to be a down day today, what do you think you want to be doing? So in a bearish day, you want to be looking to what? Sell above the opening price. You want to be looking for sell opportunities above, or not BOS, sell opportunities above the opening price, right? So this is the 15 minutes time frame. All right, this is my opening price. You want to be looking to sell above the opening price. And let's see, let me go to 5 minutes. Let me go to the 4 minutes quickly. I'm coming. I just want to check something. So 4 minutes, 3 minutes, 2 minutes, 1 minute. You can see we have this what? Imbalance here. We have this imbalance in this area. Okay, all the way to here. That is where price came. So price, that was exactly what the high, that was where price set the high. So if you are taking your entry at this, if your entry was here, although it is not in the session, this is, 11:45. This is already, it is not London session yet. But then you took a sell from here. This is you selling above the opening price. So this is like the very, very sweet entry you can get for that day, because I'm surprised might not come back there. You caught the maximum amount of peep. Whoever entered here cannot catch the same amount of peep they caught with you, because you took it from the very top. You understand? I would want to be expecting a down candle for a particular day. That's a whole lot of topic. It starts from higher time frame, liquidity, imbalance, understanding of all of that concept. You understand? But then this is just market structure. Let's just keep it simple to market structure call. Okay. Yeah. And now look at where we are now. Okay. Even look at this imbalance here. Okay. Price came into this imbalance. If you are taking this imbalance, although this would have been 1 a.m., this is still you buying above the opening price, right? And then we go to the 15 minutes now, which is where we are. There was one. So 15 minutes. Let's check London Open. London Open is 8 o'clock. This is 8 o'clock. So this is London Open. All right. So London opened in this candle. Okay. Already we have what? Imbalance in this area. Yeah. Okay. So that was it. London open exactly, feel the imbalance. So if you were going to trade this already, your entry would have been here. Stop loss would just be, this is 99541. It would be 99550 for me. Stop. Remember this I would be where it would be. Just this area. This is 8. This is about 4 pip. And then I'm just going to put it 5 pip already. Okay. And then you would have actually made your 1 to 4. I should have running like 1 to 4 now. So, I mean, it work. Just 1 minute. Oh, kick you out. Sorry, ma. You understand? Or if you want to be like more reserved, you could put your stop loss here. I mean, all the stop losses are okay. 7 pip, 8 pip, 10 pip. It's okay. You understand? You can just put this as 8. Just depending on anyone. I've been okay. Right? And then, although you couldn't catch the earliest entry here, but at least this was a good trade for you. And then you took this structure was already bearish, lower low, lower high, lower low. So that is how to catch, that is how to identify daily open. Okay. So I hope you guys have learned that. Okay. So this is the daily open, 10 p.m. If you are using the London time, if it is New York time you are using, daily open is going to be 5 p.m. 1700. Okay, that's going to be it's 1700 is going to be the opening. So I mean, I don't like to confuse myself, so I'm just going to put it in my own time. You understand? I'm not in New York, so why am I putting it in New York time? And so I want one I can understand. So this would have been the play. I would have caught this, but I was busy during when London was about to open. So I was just doing something outside. If not, I would have seen this move. Yeah, you understand? Yeah. All right. So that is how to identify the daily open. Okay. Yes. And then so we're saying this, the stop would have just been here about 14 pip. And then, want to target 1 to 3, which you made already. And then maybe we can finally get for this daily highs. Maybe. And yes, we did. Oh, okay. Oops. Yes. Finally, we did. Okay. Now that was New York Open, right? You got in, and now price traded all the way. What gave you this new structure point, right? Higher high. Oh no, we have this higher high, higher low, higher high. This is already into the new day. This is 12 o'clock. 12 o'clock is a new day. So now, based on what I have taught you now, who can tell me where the daily open is going to be on the 12th? So this candle now, starting from here, who can tell me where the daily open is going to be? All right, this is on the 12th. Okay, this is 12 o'clock. This is midnight. Okay, 2 hours back, right? We go 2 hours back. I mean, it's very easy for me to see on my broker because there's a gap. So once I just see this gap, I know, okay, that is it. This candle here, this is my daily open. Okay, and then this is where it's supposed to start from because this is a bearish candle. So the open is here. Okay, this is my daily opening price. Okay, and then I have my opening price. Again, if I'm anticipating bullish price action, I want to look for buy opportunities below what? Below the opening price, right? And then what am I seeing below the opening price? I can see what this imbalance here, right? I can see this imbalance. And then let's go with price and time, right? Price and time, 8 o'clock is 8 o'clock is this candle. So 8 o'clock is London open, right? So now, if you were waiting for the session to get started, which is this, remember, we are so close to daily highs now, so we can't be anticipating to take this. Now, 2 ways you would have played this. From what I'm seeing, one would actually hit stop loss. The second one might hold because, oh, we have 2 imbalances here. There's another one here. And see? So now that question you asked me, sir, are you still on the call? We took the first one, played out. Second one, whoever had the limit on the second one, boom, it were not activated. You must have been sad that next time I'm going to take the first one. I don't want to know what happened. Now look at it here now. Now you decide to take the first one. Yeah. This is going to be 20 for me. Stop will just be at this low here of this first candle, which is going to be this. Can you see? This would have been a stop loss hit. 7 pip, boom, stop loss hit, and then price rallied, and then boom, missed out on all of this move. And then you ask yourself, you tell yourself again, I should have just gone for the one down. But you did, yeah, it didn't play out. Now you decide to change and say, okay, no, I'm going to go for this first one now. And then as you can see, now they decide to play the second one because the first one was not in the session. The first one filled at 7:15. That was, what session was that? Frankfurt, I think Germany or so. That was before London Open. There is a session that opens before London, right? If you let's check it again. Forex. Yes, so there's a session that opens before that is Germany. right? Berlin, open by 2, no, not New York, change it back to London. It opened by 7 o'clock. So 7 o'clock, that is when Germany's open. So 7 to 3. So that's this push down was Germany, but we are waiting for what? New London. So if you were waiting for London, it would have been at this imbalance here. But as you can see, they filled the imbalance already before London session started, right? So maybe they filled the imbalance, rallied up, right? And then boom. As this candle closed, we had London session. And then for what I can see, price traded down into the imbalance again, although that's filled the imbalance, but traded down into it again and then went up. But let's assume that this is where your entry is. Okay. Stop loss would have been this is the imbalance at this low down here. At this, yeah. That is about 5 pip stop loss. This is 72. If I decide to play 80, it's going to be way up. If I decide to play 50, it's going to be way down. So in cases like this, I just put it to the nearest zero, that is 70. And then 5 pip stop loss. And then this would have been hits, you know, you go activated, came back down again. And then I'm sure this is news. This would have been news, okay? On the 12th of January, this could have been news. And then finally, we went to what? Daily liquidity. Finally, the liquidity we have been waiting for. Finally captured it. And now we're good to go. Yeah. And then, okay, so that was London session. How would you have, let's see if there was an opportunity for New York. 1 o'clock, 1 o'clock, 1 o'clock. Boom, 1 o'clock. This is New York open. Oops, New York open. So New York open, that was 30 minutes before the news. 30 minutes before the news. There was a news by 1:30. So 30 minutes before the news, we had what? Price, you know, gave us this what? You know, because it closed below here and then closed above here. So this is a break of structure to the upside. All right. So we have a higher high and then this low. If you take the fib from this low, okay, from this low to this high all the way up here, you want to be buying at 50% or below. What is below 50%? I can see an imbalance here. Okay, but then this is news, right? If there was no news, you'd have been looking to take a buy from this imbalance. But because of the presence of news and, you know, a lot of movement can happen in price, you would have been panicked as to you might not want to trade it. But let's just assume there was no news. I'm seeing the imbalance. You want to play the feel of the imbalance for New York session. You know, that's 30 minutes into New York session. That would have been entry. This would have been 50 for me. This candle here be where the stop would be. That is here. 6 pip stop loss, and then 6, and then luckily cut all of this to the upside, and then, you know, just kept going up, and then just kept going up, and then look at, and then all of this is only possible because what? There was a what? A daily directional bias to the upside. Yep. I'm done. Okay, so yes, we are 17 minutes past time. So that is it, market structure in relation to all right. So guys, that is it. Okay. So that's where we're going to end the session. All right. So we stopped at 12th January, 8 p.m. Yep. So we're going to continue from there in our next market structure call. All right. I'm sure the session was amazing. I enjoyed it myself. It was cool. Yep. All right. So I'm going to drop the recording in the library group. You can watch it again so you can have like a better understanding. So until then, take care of yourself. Have a nice day. How does it have a nice weekend? Have a nice day, guys. Bye. All right.